Hello, this is Patrick. Welcome to Chart Built Wealth, Profitable Investing with Technical Analysis. Well, I haven't posted in a couple of weeks, and I only have two long positions in oil and natural gas, which I will address tomorrow. I'm down in crude oil, but I do think it's a good opportunity, great opportunity there too. But I will address that tomorrow. But today I wanted to make two new buy recommendations on gold and silver. I've been bullish on silver and platinum and uranium on the channel before, and gold a couple of years ago, and I'm getting back on that train now. There's been some big changes in investor sentiment. Uh, as far as stocks go, I haven't really seen anything that looks that compelling. And on May 13th, I put out uh, a YouTube video, sell in May, go away. And I think since then, the S&P's up 1% or something. With all the hoopla about how great the market is, it really is kind of churning here with some steep declines in, in several different sectors. So before I get into gold and silver, just real quick, if you're in I haven't done an update on stocks, but things that I've been buying are REITs, consumer staples, all those good things, uh, the healthcare. But so be careful of technology. I think it's going to go down uh, more. So back to gold and silver. I think it's a really good opportunity. I've been waiting patiently. I tried to buy silver and platinum couple of months ago after some huge gains in those prior. Tried to buy it after they corrected 20% or something and took a loss on that of, I don't know, 5 to 10%, depending on the metal. And now they're probably 10 or 15% lower. So I'm glad I got out and it's time to get back in, and I'll show you why. Let's get into it. So this is gold. This is the long-term chart of gold. Long-term, not really long-term. I'd say intermediate term. This is about a 4-year chart, and you can see the blow-off top we had here and how sentiment got up to, uh, basically 9.5 out of 10 investors wanted to buy gold up here, which is a contrarian indicator for market technicians. By the way, I'm a chartered market technician. I've been doing this for, I don't know, 25, 30 years, and do a newsletter for a firm here in Chicago. Uh, and so whenever I do a lookup on vidIQ or do a lookup uh, on YouTube Studio, and now all of a sudden you don't see anything about gold and silver because people have lost their shirt in it, and that's the time you want to buy. So we're almost 10 out of 10 investors wanted to buy gold up at the top. That was at what, 5,600, and now we're down to, let's just call it 4,000 because my math isn't very good. That's I don't know what that decline is. That would be 55 to 4,000. That would be 1,600 points, $1,600. It's declined. So, we're down 30% or so. So, and more importantly, the sentiment is now down to 10% bulls. So I'm really happy I'm able to get Jake Bernstein's sentiment numbers on some things. Jake has been doing sentiment numbers since the 70s. I'm not sure, maybe the 60s, but for sure the 70s. And whenever you get down to 10% or less, and certainly in single digits, you know that you're near a low and you want to look for a place to get involved. So, what I like about this, you have some overlapping waves. It's not like a straight shot up like here or a straight shot down, which would tell me we're still in a downtrend. But a couple weeks ago, we had this nice bullish hammer here where prices opened the week at the top, intra-week tried to sell off, and by the end of the week, we're back up towards the high prices of that week. And then we had a couple of down We had two down weeks here recently, and we had the same pattern of bullish hammer. But the interesting thing is each week it's been able to close where the wide body is above the lows of that week 4 weeks ago. So, and these are small bullish hammers, but they're on weekly charts, so they're significant. So I'm recommending buying this. I'll show you. This is the ETF, one of the ETFs you can buy, GLD, and just to show you that the chart looks very similar. So, again, we had 4 weeks ago, we had the bullish hammer and still we're above that low of that week. So I think all that, this might be a vehicle that you want to buy it with GLD. And this is what I really like on the point and figure chart. This trend line goes back, I don't know, 3 or 4 years, this blue bullish trend line. And, when prices get really far away from that, it's telling you that it's overbought, that it's not a good time to buy because, eventually everything reverts to the mean, which is your trend line or, moving average. So we're right down on the trend line currently, and so I think your risk is minimal. So I will be using the point and figure chart. Uh, so I think the reward to risk right now, the reward is that we go back to new highs, and I do think that's a very strong possibility. And the risk here is that it breaks this bluish trend line because if it does, I'll get out again with a small loss and I'll look again. We're buying this now. Oh, I'll show you on silver because my recommendation wasn't on gold specifically, but it was on, I'll show you on silver how much lower we're now buying. And I would do the same thing with a break here. I would take a small loss, I'd reevaluate, and I'd wait for the right setup to buy it at lower prices. But you can see the risk is minimal and the potential reward is very great. This is another big factor for me. You've seen me talk about seasonality a lot and all different asset classes, and gold is one, and like agricultural commodities, August, September is when people buy for some reason. Must have to do something with the harvest or whatever that, I'm not that astute in ag to give you all the reasons why it tends to go up then, but you can see we're right at the time of a significant low based on seasonality. So, again, seasonality is just a tendency. It's not, just because this factor's there, I'm going to buy it. But if I put this in sentiment and a couple of bullish hammers after a nice big decline, it tells me that there's some buyers coming in into the space again. So this seasonality actually suggests that gold goes up until, May of next year. Again, it's just a tendency, but all this is kind of lining up for me. And I'm also, I'm not going to put out a buy recommendation on the gold miners either. Also because it's just too much to cover, and I find that if I make a lot of YouTube videos, I don't get many responses. Maybe it's too much for people to uh, to inhale. But gold miners should advance with this. Also, you can see it's got a bullish trend line. It started a new bullish trend line, and it actually has a buy signal with that bluish trend line. And, I think this is just a starter up to 89. But usually, gold mining stocks are going to do better in a bull market for gold as long as the stock market doesn't crash. Gold miners should outperform gold, but in a big bear market, if we were to go down 30% in the stock market, gold miners might go down too. So gold is the safer bet with really good upside. We're looking, if it goes to new highs, it's more than 30% on the upside. And, gold miners might go up 50%. But if the market crashes, look out, gold miners could go down too. So, what I'll tell you a little bit how I'm allocating my money into metals once we cover silver here. So here's silver, right? So, I've traded this over the last several years, bought here, sold here, missed a lot of this in silver. We got up to 97% bulls at the top. I got a huge correction, and I suggested a buy here based on this bullish wedge. Um, Here was my stop. We got stopped out, took a 10% loss. And silver, that's like 1 day or 2 days. Silver is very hard to trade. It's super volatile. I would say silver and natural gas and cryptocurrencies back in the day were probably the three most volatile securities or asset classes to trade. Or that was a relatively small loss, and you can see how much lower we are now. Here we sold at 61 and a half, and now we're buying at 55. That's another 10% down or so. So again, we're down to 10% bulls on silver. So whenever I do a Google search on, you know, gold or silver, it's not there anymore. A lot of people have thrown in the towel. And when I look at YouTube videos in the investment arena, I'm not seeing many now. About a month ago, saw a lot of them. Is it time to buy silver? Is it time to buy gold? And then they give all these kind of crazy reasons by Jamie Dimon, and like I really care. I don't really care what Jamie Dimon says. I like Jamie Dimon. He's been successful, but I don't. I'm not going to buy or sell based on something that he says. And then they don't really say whether you should buy or sell. It's just, it could go up here, but you got this. So, one thing with my channel, I'm going to give you a buy or sell recommendation, and I am going to sell it if it doesn't work out the way that it should, because the goal here is to cut your losses at a minimum. And in this case, we're buying at 10% lower, or maybe a little bit more. So silver, the setup is the same as gold, but wanted to show the historic buys and sells on this. Platinum was another one that I had a buy recommendation on, and I got stopped out similar to silver. I'm not recommending that yet, just because, again, it's too many metals, it's too many in one arena. Now I have four buy recommendations, and they're all in commodities. But I do think again, I do think we're in a 70s situation. I do think that inflation, after a huge drop this past month, you know that there was some manipulation in the oil market, a lot riding on the price of oil. And, if the Fed wants to go in, or the Treasury wants to go in and manipulate that market, they certainly have the resources to do that temporarily, but eventually the markets are going to dictate. Um, it's also interesting that long-term interest rates, after having a decline for a couple of weeks, is perking up again, and I expect to see higher interest rates. Um, so silver, it looks like a really good opportunity. Again, if this was to go back to new highs, we're talking going from 55 to more than 110. And all you that have watched my channel, and I'll post one of the prior videos on this that talks about the Elliott wave count on this. This is a fourth wave. Uh, this was not a bullish wedge because we have new lows, but it's just a zigzag correction if we go to new highs, and this would be your fourth wave. And so fifth waves would complete our big advance over the last several years, and then we get a deeper correction. But fifth wave is suggesting we're going to new highs. So that is silver. What you don't have with silver is you don't have a bullish trend line. We got a new bearish trend line on this last leg down. So the reason silver is more volatile. I don't know. Uh, so I want to talk a little bit about how I'm allocating my capital based on this. Silver is more of an industrial metal. In other words, it's not a like gold. It's not a currency of its own where central banks are going to buy it to store value versus currencies that are being weakened constantly with new debt. Silver is more of an industrial metal, in my humble opinion. And so, it could move more with the economy. So if the economy really takes off, you probably see silver do well, you probably see copper do well. But I have to say, having said all that, gold and silver move in tandem a heck of a lot. So I'm willing, with sentiment down where it is, to get back into silver because silver and gold do tend to move in tandem. Hope that makes sense. The way I'm allocating, um, and seasonality for silver is the same. We're into July now. It shows a big run. So, this is one. If I look at all the markets, am I going to buy quantum computing after it's up, 50%? No, I'm going to sell it. I'm going to sell most of it, and I'm going to look for something that's down. And so, right now, I think silver and gold give us the best opportunity with a lot of these seasonality and sentiment and some of those Elliott wave theory suggesting another high. So I think those are things that we want to get involved in. The way that I'm allocating my money is let's say I'm going to put 10% into metals. I'm going to have 5, 6% in gold. I'm going to have uh, 2, 2% in gold mining stocks, and I'm going to have, so let's say I have 5%. Let's say I have 6% in gold. I'm going to have 2% in gold miners. I'm going to have 2% in silver, and that's it. Now, uh, if your goal is to have 15% in metals or 20% in metals, then that gives you some idea how to allocate it. So thank you for watching Chart Built Wealth, profitable investing with technical analysis. Please like and subscribe. Tell your friends, family, and neighbors. Have a great 4th of July weekend. Adios.